All right, good morning, guys. It's non-farm Friday, and in a couple minutes, non-farm results are going to come out, the non-farm report, and we would be able to see how the market reacts. So remember, the strategy that we use for non-farm is our breakout strategy, and how it works. Just to be clear, we identify a range that the market has formed over the last period, and if we go here, we could see that this is a range. So before non-farm, the market was going sideways, kind of playing within this range here. And what we simply do, we're going to be placing two orders. We're going to be placing a buy stop and a sell stop above and beyond the range, about 10 pips or so above and beyond the range. Let me just check. So this is 15 pips, and that could work for me, and this is also 15 pips, so that could work for me as well. And what we're gonna do is we're gonna place these areas. Those areas are gonna become our buy stop. So let me put it in here. This is going to be a buy stop, and this is going to be our sell stop below here. My stop loss for my sell stop is going to be up here at the same price for my buy entry, and my stop loss for my buy stop is going to be down here at my sell stop entry. So this price point, so for instance, when I'm setting this up, I'm going to go on my broker platform and I'm going to say, you know what, we're going to put buy stop at 2369.77, and my stop is going to be 2360.30. And I'm going to put a sell stop in on my broker at 2360.30, and my stop is going to be 2369.77. Then what I'm going to do is measure. All right, so I'm going to say, you know what, this move, my risk on this is going to be 91 pips, and I need to go after a target, which is a minimum of 180 pips away, minimum 1 to 2, sometimes 1 to 3. So I'm going to come here now and I'm going to say, you know what, 180 pips is going to take me up here to 23.89, around there, 23.88. So I am going to come and place a limit order here, and I'm going to place a limit order below here. Let me see how many pips is that. Same thing. It's going to be the same 90 pips. 180 is going to bring us at 23.42, around there. All right, so 23.42 is going to be my target down here, and that'll be my target for the sell stop if that gets taken into 23.42, around there. And that's my trade. And you set this up basically 5 minutes or so before non-farm is about to come out, and you could do this on multiple pairs. It's going to be very simple, very straightforward. And I just set it up on gold. Gold is going to have the highest risk. You could do this on pairs that will have less risk, and then we'll see what the market does if it takes us into any one of these trades. Now, we have to understand that sometimes non-farm, this works when we have a nice direct push, but sometimes non-farm, the market could spike. So if the market pushes up, spikes us in a trade, and then goes the next direction, then we could be stopped out on both trades, and that's something you have to understand the risk involved when doing this. So for instance, the risk on this trade is 90, which means if we get spiked out, taken into both and stopped out, then we basically could lose 180 pips max. But if we get spiked into one and then the market pushes the next direction, we would have lost 90 pips on one, but then the next trade would basically make us profit. So non-farm is about to come out shortly here in under a minute. So let's go to the charts. Let's see, I'm zoned in here on the US dollar. And as we could see, we have some bearish movement. On the left side, I have my pairs where the US dollar is our follow-up pair. And on the right side, I have the pairs where the US dollar is our lead pair. So let's see how non-farm comes out today and what we could expect. I'm going to zoom in on this to see the type of move that we have this morning on non-farm, guys. Let me see. Did the results come out as yet? 4 seconds. Good. So we have a nice bearish move on non-farm. And we have this market pushing, well, bearish on gold. So we would have been taken in our sell stop here. And the market is pulling back right now. But we would have been taken in our sell stop. This would have been activated. Let's see what the market does for the rest of the period. This seems to be a spike in there. Because as you can see, we had a big push down. But let's see what the market does. If we go over to the other pairs that we would have set this up on, you see we have a bullish move, we have a bearish move on the dollar, which means we had a big spike up this time. So as I said, it seems that we are going to be spiked out of this one. Right now we would be down on the one trade that we placed if we did. Right, and remember I was just showing you all how you trade the strategy. When we have spiky moves like that, we do not have a good setups here, because as you can see, we would have been taken in bearish on this, and now the market is up here at this level like this now. So again, the candle hasn't closed as yet. If you took this sell stop, you would not have been stopped out as yet, but we need to wait and see. Let me actually go check the news and see what came out. Let me refresh. So non-farm results actually came out positive for the dollar. But we had a negative move, which is what happens sometimes when we have those spikes. So as the market is pushing up here now, we would have been not quite stopped out as yet. But let's see what the market is doing. As I said, today would have been a spiky day. Right, so we would have been stopped out on our sell stop. And if you place both orders, we'd now be taken in our buy stop. So we would have lost 90 pips so far. Minus 90 pips on our sell stop. And now, let's see, we would have been up. How much are we up right now? We're currently up 60 something pips. And again, today seems to be a spiky day because the market is actually doing the opposite. We had positive results for non-farm. We did have that initial spike, but then you could see the market rejected and came back down. Let me just change this to a larger time frame and see if there's a level below here. All right, so we seem to just be pushing bearish right now. Let me go back to the 15-minute. This is where we're at right now on the 15-minute. So it is a spiky day for non-farm results. So this would have been a nasty day to trade non-farm. But it is how it is. The last two non-farms that we traded were not spiky days. So we would have had a nice push in one particular direction. Today seems to be doing the opposite, guys. All right, so I'm going to wait 1 more minute, just giving us 5 minutes after, and then we'll probably follow up at a later time again to see what this market is doing, where we're at, what we're looking at in terms of setups and entries. So just based on the one that we placed, we would have lost 90 pips because we would have been taken in our sell trade, and then the market came back up and would have stopped us out. And then if we had both positions placed, we could see that this market here now would have been pushing bullish. It would have stopped us out and taken us in our buy position. But again, the market seems to be doing a big spike. So that's it for today, guys. Let's see what the market actually does, what setups we end up getting after today, because remember, non-farm, I use non-farm to kind of plan for the month. So non-farm usually gets us into those moves where we basically start seeing next week, we'd see setups happening, we'd see trades happening. So let's see what actually happens when this settles down. And we go from there, guys.